Good morning. Good morning. Good morning. How's everyone doing? It's about 3 minutes past the hour. Just in time for today's daily analysis session with the Afriforex team. Hope you're all well. Good to see people streaming in here. Hope you had a good time on the chats yesterday as well. But we're really glad that you could join us for whatever it is that you're joining us from. So for the sake of guys who are new to me and to us, John Bogo is my name. I'm a trader with Afriforex. Afriforex is a trading unit. It's not a one-man show, so we also do have Mitch. He is working in the back office. So in case you do have any questions, feel free to ask them both on the Q&A section and also on the chat box. But we always do prefer that you do ask those questions in the Q&A section so that I can also look at those questions at the tail end of this webinar. But remember, you don't really need to wait until the very end of the webinar. You still can ask questions even as the webinar does end up progressing on, and you will definitely get a much favorable response. So we're going to jump straight into it. We'll start off by looking at what we did have on the charts yesterday versus what we do have today. So you can see the watch list right there. Today, the 9th of July. See that there is a couple of changes, so feel free to take note of that. But we'll be having a look at a brief recap of the things that we did have yesterday that unfortunately did not make it onto our watch list this morning. So we'll start off with the Swiss franc against the Japanese yen. So for this one yesterday, we're trying to see whether we could have gotten some selling opportunities. You clearly can't see the three regions right there that I had pointed out. And in the morning, when we're looking at the charts, price was somewhere within this region right here. And I told you guys, you could ideally put sort of an alert somewhere within this area right here, because you didn't need to really look at the charts when the price was high up within these regions. Wanted the price to come back in within this region for us to possibly look for the selling opportunities. And you can see that the market came back in, did what we had illustrated, just that it went much higher than where we had anticipated. But you can see that the market came back in. If you look at the times, this was at around 4:30, which is during the New York stock exchange open. So you can see that the market tapped within that region, came down. Of course, we'd have expected maybe the markets to continue making lower lows and lower highs. But unfortunately, definitely something to do with the yen. Fortunately, it couldn't come back all the way down. But ideally, if you did get the sell there, definitely didn't need to manage your trade maybe somewhere within this area right here. You can see that the market is more or less stagnant within that area. So we'll be walking away from that today. Could be a currency pair that could give us issues. You could find it stuck within that area. So the other one that we had that unfortunately we don't have today is the Canadian dollar against the Japanese yen. So for this one, trying to see whether we could have gotten some sells. And you can see in the morning, price was somewhere within here at around 9:10. Price came up, and you can see that during the US session, that's when the market was high up within here. If you look at the time at exactly 3, which is during the New York or the US session, you can see that the price pushed itself to the downside of that region. So if you did get the sells within there, definitely did need to manage there, because in case you did not, then unfortunately you can see that the market has gone all the way back till the entry point. So unfortunately, we'll also not be looking at that one for today. So we also did have the New Zealand dollar against the Japanese yen. So for this one yesterday, we're trying to see whether we could have gotten sells. Almost some sort of a similar situation with the Canadian dollar against the Japanese yen. So you can see that during the London session, the market was coming up. And remember, when we looked at this one yesterday, I had pointed out that the buyers had come up aggressively. We needed to see them slow down. And you can see that they attempted, to break above this region to the upside. But you can see that the sellers pushed them back to the downside, which is what we wanted to see. And you can see the aggression. And once the market pulled back in within there 3, I mean, if you did get the sells within there, but if you wanted to be a bit more conservative and have your stops, high up within this region, you can generally see that the market pushed itself to the downside, even coming down all the way till within this region right here. So this one wasn't a bad one. But of course, unfortunately, also another currency pair that unfortunately we'll not be looking at for today. So the next one is the Australian dollar against the US dollar. For this one, we're watching out for buys yesterday. You can clearly see the 3 areas right there that I had pointed out in the morning. When we're looking at the charts, the market was just coming back in within this region. And you can see that all through the London session, there wasn't much that was happening. It's only during the US session that from around 3, the market pushed itself to the upside. You can see just came up, just slightly tapped that region at around 4:30, back within some sort of a seller's region. Not really surprising, to see that the market pushed itself to the downside of this area. it was expected. But ideally, you can see that the market is stuck within this range right here. And of course, would have expected the market to make higher highs and higher lows, but unfortunately did not do that. And of course, due to the fundamentals and what we're expecting the big boys to do, not really a currency pair that we'll be watching out for, because we could be stuck, in that mess right there. So last but not least, for review, we have the euro against the US dollar. So for this one, also a currency pair that we had yesterday that unfortunately is not going to be on our watch list today. So for this one yesterday, we were trying to see whether we could have gotten some buying opportunities. And you can see the three regions that I had pointed out. In the morning, when you're looking at the charts, the market was just coming back in. It was actually somewhere within this region. I had pointed out that maybe you could find that the market could push itself off this region to the upside because there was some sort of an SNR here. But we're really keeping our fingers crossed because we're really hoping that the market would have come back in within this region. Unfortunately, that didn't happen. And of course, when the market broke this region to the upside, we wanted to see, maybe the market hold to the upside and completely take off to the upside. But unfortunately, due to some USD news events that came out at around, I think it was at around 5 and also at around 10, unfortunately, the strength side to come in on the USDs. And you can see that this one, the euro was really fighting. And you can see that even moving into the Asian session, which is what we're on right now, and more or less just jumped into the Frankfurt session as well. You can see that the market is stuck within this region. So we also don't really want to sign up for trouble, by looking for trades on this one. Could easily end up getting stuck within that region right there. So that's pretty much it for the reviews. So we can look at a couple of screenshots that we did end up getting yesterday, and shout out to everyone who did send a screenshot or two. So we'll start off with this one from Bravin. So this is on silver. Do you know that, Bravin, you love trading silver? So good to see that you got a couple of buys. It seems like you got a couple of buys within here. Stop losses already above your point of entry, which is good. Definitely a region where it seems like the buyers did start to push the market to the upside. Two probes there, definitely true SNR within that region. Don't know where you are targeting, but ideally this is a good entry, and I'm definitely sure that you are watching out for problem areas where you would encounter issues with the opposite party. So that was really, really well done. So shout out to you, Bravin, and keep it up. Good to see that you're still in the game. So we also did get a couple of screenshots from Dan Pickett. So starting off with this one, this is the New Zealand dollar against the Japanese yen. So I can see that you got a sell somewhere within here. And we did discuss this one when we were doing the review a couple of minutes ago. So I'm very sure that you definitely did hit your take profit down within this region. But this is a good area in terms of the sell. Waited for the pullback. Stop loss already below your point of entry. So this is some really good trading. So shout out to you for that, Dan Pickett. And you also did get the UK 100. Not really something we look at, but good to see that you got a good buy within a region where we do have buyers. Stop loss already above your point of entry, but also seems like you're stocking the market too close in terms of where you put your stop loss, because a slight pullback and immediately you're taken out. But I can see that you have, some sort of SNR within this region, which means that you're definitely watching out for, the reaction that you would get there. But it's good to see that the buyers, really took off from within this region quite aggressively, which is good. But ideally, maybe the only thing is your stop loss is a bit too close. Seems like you're really trying to corner the market. So you also did get the DAX 40. So this is a buying opportunity. Good region. Always, like we always say, buy with buyers, sell with sellers. So you did buy with the buyers, and it did definitely pay off. So I can see that the market was taking off to the upside. And of course, can see that your stop loss is just exactly where the market would possibly pull back. If it breaks to the upside, always expect the market to possibly do some sort of a retest. And unfortunately, if that happens, then the price would definitely collide with your stop loss. So maybe just having your stop loss just slightly lower. Sometimes when you're afraid, and everyone is afraid of losses, it comes to trading. But now if you end up stocking the market too close and putting your stop losses too close, then you also end up jeopardizing the chances, of that trade fully paying you what it should be paying you. So just make sure that you try keep your stop losses a bit far away from price in as much as you're stocking the price, so that you give the market enough room, because remember that the market has to move in higher highs and higher lows, or lower lows and lower highs. So give it enough space to have that ebb and flow. And always make sure that when you're putting your stop losses, like for example on this one, you can definitely see that when the market is coming down, there's this scenario within here. If you put your stop loss within that area, when the market comes back in within this region for a retest, then definitely the price is going to hold with your stop loss, and you might end up getting taken out. And after that, the market might move all the way to where you had ideally visualized to have your take profit. So just make sure that you watch out for that. And of course, that advice doesn't go out to Dan Bickett alone. It goes out to everyone who's here and everyone who's watching. So this is the US 30. So the Dow, good to see that you got a good sell somewhere within this region as the market was coming down. Quite an aggressive entry, but it did pay off. Take profit down within here. And of course, stop loss. Good to see that it's below your point of entry. But like we've discussed, just make sure that you just give it a bit more room. But good to see that you're still in the game, Dan Bickett. So we also did get a screenshot from Daniela. Good to see your screenshot here. So this is on gold. So good to see that you got a sell somewhere within this region. Definitely a region where we do have sellers. I'm sure that you timed the buyers slowing down within there. If you got the market somewhere within this region right here, then that was really good. Coming down, definitely the market paid off. Good to see that at least your stop loss is below your point of entry, but also giving the market sufficient room, and you take profit all the way down within that region right there. So that's a really good trade. Don't know if the market got all the way down to within there, but that was a really, really good attempt. So shout out to you for that, Daniela. And last but not least, we did get a screenshot from Essie. So Essie, if you're here, shout out to you as well. So this is on gold. So Daniela got the sell, you got the buy. But that's the beauty of trading. Depending on where you end up getting trades, everyone can make money, regardless of which trades you take. It's just a matter of where you take the trades. So one took the sells up there, another took the buys down here. They all made money. So I can see that for this one, SC, good buy down there. Stop loss already above your point of entry, but also a bit tight. Maybe having it somewhere within this region, just giving the market a bit of room. But I know that gold did end up moving up quite significantly. So this was a really good trade. So shout out to everyone who did send in a screenshot or two. Definitely, I think Dan Bickett was man of the match yesterday. You're really killing it on the charts yesterday. So shout out to you for that. And of course, everyone else who did send in a screenshot or two. So remember, guys, feel free to send in your screenshots. We're more than happy to see what you guys are up to on the charts. You can send them in to us via WhatsApp. Our contact details should be there on the chat box. And of course, that goes out to the guys who are here on Zoom. For the guys who are watching us on all the other social media platforms, I'm sure just look for our number on our website. But also remember to like and subscribe on whichever social media platform that is that you're enjoying the show. But shout out to everyone. All right, so I guess we can jump straight into business today. So you can see Tuesday, the 9th of July right there, and you can see the watch list. So we'll be trying to mix and match up buying opportunities on the Australian dollar, the euro, and the US dollar against everything else on the sell side. In terms of fundamentals, there isn't that much that's going to be happening today. It's going to be pretty much dead during the London session, but it doesn't mean that the markets are not going to be moving. So still watch out for opportunities, but let's see what happens during the US. Just two news events, but quite later on. So we'll wait and see what happens. Almost similar situation tomorrow, but I know that Thursday we do have a bunch of news events. So we could find that maybe the markets don't really end up moving today, and tomorrow maybe the big boys, could be saving that action for Thursday. But let's see what happens. So we'll start off with the Australian dollar pairs, mix and match that up with everything on the sell side. So the first one off the line is the Australian dollar against the Swiss franc. So for this one yesterday, we're also trying to see whether we could have gotten some buying opportunities. And you can see the three regions right here that I had pointed out. In the morning, price was somewhere within this area right here. I had pointed out that don't look for the buys within here. You could find the market coming back in within this region, and it did, but it quickly tapped within that area. But I had also pointed out that you could find that if the market breaks to the upside of this area, you could look for buying opportunities within this region. The buys didn't really move during the US session, but you can see that during the Asian session, that's when the market moved. It's also not something uncommon. I mean, we're talking about an Australian dollar pair here, and you know that the Australian dollar pairs are normally quite active during the Asian session. So you can see that the market came back to the upside held like we had anticipated, and after that, you can see that the market has pushed to the upside. So let's see if we can either get the market breaking above here to the upside. If it does, then we could ideally wait for something similar to this situation right here. So let's say if the market breaks to the upside and we get something like that. At that point in time, that's when you can look for your buying opportunities within there. If you do look for buys right now, your risk to reward might not really be the best. It doesn't mean that the trade won't work. It could, but it's a risky trade, especially looking for the buys right now. You can generally see that this region right here, we have a bunch of sellers, who are sitting within this region. So by you attempting the buy there, you're technically almost acting like some sort of a big boy. It's like you have more than enough money to actually take out this level right here. So don't really take that risk. Wait for the big boys to break the level. Once they do that, then you could ideally end up looking for your trading opportunities, something almost similar to this within this area. So watch out for that. But also give the sellers the benefit of doubt. If they do push the market back in, within this region right here, because, they've done that before. You can see that this was on Friday. They pushed the market off this area to the downside back within here. They can do that again. So just make sure that you give them the benefit of doubt. If that happens, then ideally we could look for some proper buying opportunities within here. If not, then watch out for this area. So more or less the same areas that we had yesterday, in as much as the market has moved, but not really far and beyond the areas that we had pointed out. So the story that we did have yesterday still, maintains moving into today. So moving into the next, this is the Australian dollar against the Canadian dollar. So for this one, you can see yesterday we're watching out for buys. The three areas right there that I had pointed out in the morning when we're looking at the charts, price was just coming back in at around 910. You can see that price was just coming back in off this area right here where we do have some sellers, came back in within this region, attempted to bounce off here during the London session, during the US session, still nothing. And you can see that the market has pretty much been dead within this region right here. We've not really seen anything from the buyers. So we'll be waiting to see what happens. You could find that maybe the market possibly needs to spike beneath this region to the downside, maybe even coming somewhere within this area right here where we do have these buyers. And maybe once that happens and the market comes back to the upside, that's when you possibly find that the market could go to the upside, maybe even breaking this region to the upside. Just make sure that if you get the buys here, manage within this region here, even if you will be targeting areas much, much higher. So just watch out for that. But of course, if they do need even a much better price, then that's the reason why we do have this area at the bottom right here. You could find that that's the best area where you could find some proper buying opportunities. At that point in time, maybe even the opposite party would have really been incited. We'll have a lot of sellers coming in at that point in time, which is good for us. Since we're looking for buys, those are the guys we're going to be doing business with. So watch out for that. But remember the red SNR at the bottom, in case the market breaks that to the downside, then unfortunately there will be no trade for us. So moving on into the next one. So this is the Australian dollar against the New Zealand dollar. So also a currency pair that we did have yesterday. And you can see the three areas right there that I had pointed out. So aggressive, conservative, semi-aggressive, conservative within this region right here. In the morning when we're looking at the charts, price was somewhere within this region right here. And remember, I did point out that during the London session, or any of the sessions rather, if the market is within a buyer's region or a seller's region, there's a high probability that the market could be pushing itself, off those regions. And you can see that this one, considering the fact that the market had attempted to break to the downside, came back in and held. And this is exactly what I was talking about, even on the other currency pair, the Australian dollar against the Canadian dollar. If you get something similar, probes are very powerful. They always incite the opposite party to come in. And sometimes the big boys, that's the last push that they need, before they actually come in and start to push the market. That those last few coins or dollars that guys are actually going to be placing on the table is what the big boys need before they actually make a move for it. So you can see that yesterday we did discuss this. I talked about you could have your stop somewhere within this region right here, or maybe just slightly lower, but generally not too far off this region. And you can see that off that area during the London session, the market moved to the upside. You did need to manage within here because you'd not have been too sure about what type of reaction you would have gotten off the sellers within this region. But nonetheless, you can see that the market did continue to push to the upside, maybe even another entry somewhere within here. But that was at around 1:30 or 2 a.m. in the morning. Very sure none of us were on the charts at that point in time. So for this one, did give a good buy yesterday. So for today, the levels are more or less the same. Reason being, you can see that the market has just come back up within this area right here. And we do need to see that the market has broken this region to the upside and actually held above it for us to continue with the buys within this region. But the fact that you can see that the market has been here before and the sellers have been able to push the market back to the downside, they can't do that again. So give them the benefit of doubt. So you could easily find that either the market could come back in, and if it does, you could find that some proper buying opportunities could happen, off this region right here, and maybe the market could do something like that. Because also remember, at this point in time, if you're hitting the buys within here, also have it at the back of your mind that there's a slight possibility you could be chasing. And definitely more and more people are jumping in on buys right now. Not very many people were hitting buys when the market was here, because what they could visually see at that point in time was this move coming down. So all they were thinking in their minds was sell, sell, sell. But once they started getting stopped out, now many people are starting to jump in on the buys. And now as they start to jump in on the buys, that's when you find that another pullback might come in. They get stopped out on the buy. Then when they start looking for sales, that's when the buy happens. And that's ideally how FX works, So it's always a matter of, mixing people up. The big boys don't want you to make money, so they'll mix you up as much as they can. So do watch out for that. And let's see also this region at the bottom right here, keep an eye out for that. There's also a possibility, slight possibility price can come back in there. It's come back in deep all the way till there, so it can't do that again. So just make sure that you're also watching out for that. But ideally, the bias is to look for those buying opportunities. So moving on into the next one, this is the Great British Pound against the Australian dollar. So for this one, yesterday, we were watching out for selling opportunities. Unfortunately, yesterday, the GBP pairs did not really work out very well, something to do with the GBPs. And you can see that this one, we wanted to see if we could have gotten some sort of a slowdown of the buyers within this region. Unfortunately, we didn't get that. The market broke to the upside. And of course, this being the aggressive area and the last area where we were watching out for buying opportunities. Once the breach happened to the upside, then unfortunately, there was no trade for us. So for this one, unfortunately, no opportunity yesterday, but let's see what happens today. So these are the three areas we will be watching out for. So make sure that you do take note of these three areas right here. You can see that the market did some sort of a U-turn within this area right here. Seems like there's a bunch of sellers within there who've been able to completely turn the market around, which is good. But ideally right now, the market is coming down. Let's see if we can possibly get the market holding within here. You could find that maybe at around 10, price could potentially push itself off this region to the downside. You can see that the market came down, broke to the downside, went up, couldn't sustain above. Right now, it's sustaining below, which is good, because for us who are sellers, this is exactly what we want to see. The only issue with this one is if you're, let's say, for example, going to be hitting a sell within that region right there, and the next problem area is somewhere within here. Unless you really try and get a really tight stop loss, just trying to make sure that that risk to reward is worth it. Because if you do get trades that are giving you a 1:1 point something, that's not really good. You want to be doing 1:2 point something going up. So for this one, just to try and squeeze and make sure that you get a proper risk to reward could be a bit tricky, because you could find that maybe the market might spike within here. You might get stopped out before the market does actually end up making a move for it. But ideally, it's not really too bad of a trade. Remember that in trading, there's a principle that we always have. We say that you miss 100% of the shots that you don't take. You could possibly end up not taking this shot, but if the market moves, you've missed that 100%. So I think that's also something you guys can also end up applying in your trading. So we always say that you miss 100% of the shots you don't take. So you could find that this one could work out. If you end up having your stop losses too wide, then you see the problem that you end up encountering is the fact that, your risk to reward ends up being a bit off. So for this one, maybe having stops within this region, because in any case, if the market comes up all the way till within here and breaks this region to the upside, even if you end up having your stop losses higher than this, you could survive, but also maybe if it comes up all the way high up within there, you're maybe better off being stopped out on this one and maybe having another better attempt, somewhere within this region right here, and you could easily end up recovering. So this one, a bit of a tricky balance, but ideally, if the market spikes within there, and let's say the market doesn't stop you out, or if the market starts to make a move at 10, you could easily even end up targeting all the way down to within these regions. The reason why we have this area right here is because you can't ignore the fact that the market can easily bounce off this area, and you need to be ready for that psychologically. Because if that happens and you're not ready for it, that stop out, in case you do end up losing the profits that you end up gaining coming down, is really going to be painful. So we just need to make sure that you're ready for that. But ideally, if we do slice through this region to the downside, then ideally, I think we could potentially end up coming down within these regions, or maybe even down to within this area right here. So let's just see what happens, but it's not too bad. The fact that the price is holding within here, let's see what happens maybe during the London market open, which is going to be happening within the next 30 minutes. And of course, sometimes if you don't find the markets really moving at around 10, then just make sure that you do watch out for around 10:30 or thereabout, because sometimes it takes maybe 30 minutes or an hour before the markets really start to make a move. So moving on into the last AUD pair. So this is the Australian dollar against the Japanese yen. So for this one, this is a new entrant on our watch list, and we're going to be trying to see whether we can get some buying opportunities. For the guys who are new to trading and you're getting a bit mixed up, just watch out for where the Australian dollar is. You see on this one, it's on the left. So it's the base currency pair. And also for the ones that we had looked at earlier. So it's the basis for what we're doing. The reason why we're looking for sells on this one is because the Australian dollar is to the right. So it's the counter currency pair. So by selling the Great British Pound, we're automatically buying the Australian dollar. So we are still buying in all of them. So in case you end up getting mixed, why is it that the Australian dollar is for a buy, yet we're looking for sells on some of them? It's all to do with where it is. Is it on the left or on the right? So for this one, these are the three areas that we'll be watching out for. You can generally see that the market structure is a range. That should be very clear for everyone. So the best area to take buys in any given situation, especially when we have a range, is definitely down within here. If you hit buys within these regions, more or less, yeah, you could possibly end up getting away with them, but it's not really the best way to go about it because they might not really give you the best risk to rewards. You could hit a buy here, have your stop within this region, but get stopped out. Attempt another buy somewhere within here, get stopped out, only for the buy down here to actually end up working out. And you'll be left there wondering, why couldn't you just wait? So make sure that you also end up playing with the structure. It increases the probability of your trades working out. So let's see what happens. The only time we'll be looking for buys within this region is if we can get a breach of structure to the upside. If we can get this market breaking above here to the upside, and we do actually end up getting a visual hold where we get a proper breach of structure, then ideally at that point in time, we could look for the buys. But right now, you can even see how the sellers are coming down quite aggressively within this region right here. So you can't ignore the fact that the sellers are still there quite aggressively. So you could find that the market could be down back within this region. If the market needs a much better price, then that's the reason why we have this region right here. So just make sure that you also do watch out for that. So that's pretty much it for the AUD pairs. So right now we're going to move on to the Euro pairs and do the same. So we're going to mix and match them up with everything on the sell side. So we'll start off with the Euro against the Swiss franc. So for this one, also a currency pair that we had yesterday, trying to see whether we could have gotten some selling opportunities. You can see the 3 years that I had pointed out in the morning when we're looking at the charts. Price was somewhere within this region right here. So at around, this was at around 9:30, around this time, we're expecting price to come back to the upside. You can see that the market did actually end up coming up quite aggressively off this region right here. Did need to manage within that area. And of course, let's say if you didn't get the buy down there, you can see that there was also a really good buying opportunity somewhere within here. After the market started to hold within here, even move to the upside, especially on this last pullback. I mean, you did need to be a bit patient, hanging on to this mess that was going on within here. But you can see that during the Asian session, the market has continued to move to the upside. So it's like the buyers started off with a lot of momentum right here. Then it's like they started to slow down, and they've really slowed down right now. So there's a possibility you could find the market either pulling back in within here, especially considering how slow the buyers have approached this region right here. And if that does end up being the case, then we'll be waiting to see if we can get a pullback somewhere back within this region right here. So for this one, just be a bit patient. Don't look for the buying opportunities right now. If you do, then you could be signing up for trouble, because you can see that generally this area right here, we do have some sellers. You could find that proper buys could be happening off this area right here. You could find that also maybe during the London session, the market could be on the pullback phase. And you find that maybe at around 4:30, that's when the market is back in within this region for, a proper buying opportunity to actually end up taking place. So do watch out for that. Remember the red SNR, in case the pullback does end up coming back in all the way, then that's the last area that we'll be trying to see whether we can get buys. If the market breaks beneath the red SNR, then unfortunately at that point in time, there will be no trade for us. So the next one is the Euro against the Canadian dollar. So for this one, also a currency pair we had yesterday, watching out for buys. In the morning when we're looking at the charts, price was somewhere within this region right here. And we wanted to see the market come back in within here to look for some buys. But unfortunately, we couldn't get that. And you can see that the market technically fooled around within this region, broke to the upside, seemed like it was holding to the upside. But unfortunately, even if you did get buys here, we just couldn't get past this region right here. And this is also something that we keep on talking about, from time to time in terms of, if you're going to be taking buys, especially if the market has broken a certain level, watch out for the next high that the market has broken. And sometimes when the market breaks and just holds above, this type of trades end up being quite technical to take. Yes, you can take them, but they might not really give you the best risk to reward, because what you normally want is something that breaks to the upside. Let's say, for example, had it broken to the upside quite aggressively and moved, far away from this level, so that if it comes back in within this region, ideally your next target area would definitely be back in within this region right here. This is what we normally call the guaranteed profit zone. So you see somewhere within this region right here, and your point of entry at the next SNR, that's guaranteed profit. And you can see that when you end up looking at the situation of what happened yesterday, the people who attempted buys here thinking that the market was going to go high up and ignored this region right here, unfortunately, those guys right now, if they're still hanging on to those trades, they're not very happy about the situation. So just make sure that you're always prepared. So for this one, these are the areas that we'll be watching out for today. Let's see if we can get the market tapping back in somewhere within this region right here. You can see that the market has come back in as close as possible within here. We do have some sort of an SNR within this area, which is some sort of true SNR. You can see that the market did some sort of a probe with a gap to the downside, tapped that region and also this region and also this region. But one thing that we're looking at, and that's the reason why we have this region, because we could also have this area right here, is the fact that the market hasn't really moved from this area right here. And when you end up seeing this, what it normally means is that this price is not good enough for the big boys. Because if the price is good enough for the big boys, the market would have already gone by now. The fact that it hasn't gone, then it means that there's a price that the big boys want before they actually end up making a move. And of course, now, because we're speculating to the best of our ability, we're thinking that that price could be somewhere within this region right here. So what we're expecting is maybe the market might tap back in, within this region right here. After it does that, then you could find that maybe that's when the market might possibly end up making a move to the upside. So let's just keep our fingers crossed and see what happens. But I think there could be some good buying opportunities happening within there. In case that doesn't happen, then I guess we'll have to wait and see if we could possibly get the big boys sitting somewhere within here to get the job done. So just make sure that you do watch out for that. And remember the red SNR, in case the market breaks that region to the downside, then unfortunately, there will be no trade for us unless the market breaks above and holds above that region to the upside. And no matter what you do, always make sure that you do trade with a stop loss at all times. So moving on into the next one, this is the euro against the New Zealand dollar. So for this one, yesterday, we're watching out for buys. And you can see the three regions right there that I had pointed out in the morning. So at a time like this yesterday, price was somewhere within this area, and we're expecting maybe price to tap in within here. Unfortunately, it didn't. The market went to the upside, and you can see that the market technically broke this region to the upside, came back in for some sort of a retest. Not exactly within the price that we wanted, but you can see that it did give some sort of a pullback within this region right here and continue to move to the upside. So a bit of a tricky situation in terms of grabbing the buys, but today we're back at it. So we'll be watching out for these three regions right here. So make sure that you do take note of those three areas right there. Don't look for the buys right now. Wait and see if you can get the market pulling back in, either within this region here or somewhere within this area right here. Right now, if you do end up taking the buys, then you're so close to the ceiling. It's not really going to give you some proper risk to reward. So you're better off either waiting for the market to break to the upside. And hopefully if it breaks quite strong, then ideally you could look for that buying opportunity to target the high or maybe even challenge that high and maybe even go much higher. So do watch out for that. But ideally right now, give the sellers the benefit of doubt. You could find maybe the market needs to come back in within here. And you could find that maybe at 3-4.30, if the market comes back in within here, that's where the proper buys could potentially end up taking place. So make sure that you do watch out for that. So moving on into the last euro pair that we do have, which is the euro against the Great British Pound. So for this one, also a currency pair we had yesterday. Yesterday, we were watching out for buys. In the morning, price was somewhere within this region right here. And remember, I pointed out that the buyers had come up aggressively, and I did point out, don't really look for the buys within here, because we're also approaching a region where we had some sellers, and you wouldn't really have known how the sellers would have reacted off this region right here to push the market to the downside. And in any case, there's no point chasing this tiny move right here, because by the time price was even coming within there, you're technically just chasing 4 pips. It's not really worth it. So you can see that the market came back in within here, held, pushed back down, and you can see the market actually did come back in within this region. This was during the US session. So you can see that off this area, but if the market really took a bit of time to set itself up, attempted and started to push to the upside, and you can see that the market is still coming to the upside, although in a very choppy manner. So right now, the market is more or less back within the same price that it was at yesterday, at a time like this yesterday. So it's done a full cycle, but we're more or less back within the same region. So for this one, the levels are the same. So don't look for this buying opportunities. Same story as yesterday. Don't try and squeeze yourself within this region right here. Wait and see if you can get the market breaking above this region to the upside. If we end up getting that, exactly similar to what we are waiting for, then you could potentially look for the buy. This buy is definitely worth it's definitely worth it rather than actually chasing this buy, trying to squeeze yourself within here. But also due to the fact that the market could potentially be getting into a range. It's not yet fully confirmed because it's now just coming back within this region. You're not too sure whether the market could come back in within here. So you could hit the buy there only for the price to come back in within this region. So also wait and see if we could potentially get the market coming back in within this region if it can't break this area to the upside. And remember the red SNR, if the market breaks beneath that to the downside, then unfortunately, at that point in time, there will definitely be no trade for us unless the market comes back to the upside of that region. So that's pretty much it. I think, although I'm seeing the Great British Pound against the Japanese yen, I don't really think this one should be on our watch list for today. So I'll just trash that and then we'll jump in to this USD pair. So we're pretty much done with the Euro pairs. So right now we're going to move on to the USD pairs. We're going to mix and match that up with everything on the sell side. So the first one off the line is the US dollar against the Swiss franc. So for this one, we're going to be trying to see whether we can get some buying opportunities. So make sure that you do take note of these 3 regions right here and be a bit patient. You can see that the market is just coming back off this region right here. Let's see if we can get a breach to the upside of this area. You can definitely see some big sellers are sitting within this region. So you don't really want to be funding those guys. Don't really want to be giving away your money today. So just make sure that don't be too philanthropic. If you end up taking some bad trades, then you're definitely going to be giving and funding some guys today. Make sure that you're the one who's being funded. So don't look for buying opportunities unless the market breaks above this region to the upside. And of course, let's wait and see. Maybe some good buys could be coming in somewhere within this region right here, but also watch out for that region at the bottom right there. That's going to be the last area. So the next one is the US dollar against the Canadian dollar. So this is also a new entrant on our watch list. And just looking at this one, you can clearly see that the market is in some sort of a range. So this one is pretty clear cut. In fact, this is perfect. Buyers are down here, sellers at the top. The market is back in within some sort of a buyer's region, which is good. If you're going to be attempting buys within this area right here, let's say if you get the buy within here, if the market comes back in somewhere within this area, you could definitely have your stop losses, somewhere within this region right here, because that's giving you about 8 pips or there, about top of the range, not really giving you a 1:2. So ideally also what you could end up doing is, of course, you can't end up targeting further than this, just to make sure that you get the proper, a proper risk to reward. But it's also best to be realistic in terms of what the market is telling you. I mean, you can't ignore the fact that there's some sort of a seller's region at the top right here, and the market has reacted off there a number of times. So this should definitely be the area that you should be targeting. But also on the other hand, what you could find is that the fact that the market has attempted to come down here a number of times, or push itself off this region a number of times, and it hasn't been able to go higher than this, then there's definitely one thing that this means. This means that the market possibly needs a much better price. And that much better price could mean that you could find that maybe the market might need to spike, maybe lower than this, slightly lower than this. And this is the reason why you find that sometimes you take a trade and exactly where you put your stop loss is exactly where the market comes until. It's because you're putting your stop loss maybe based on this reference point right here. But the fact that the market has not been able to push itself and breach this region to the upside, it means that even this price wasn't good enough. And when you put your stop loss there, the market will ideally just come, tap your stop loss and go for it. And then unfortunately, what many people actually end up saying is that, the broker is trading against me and all sorts of stories. But it's not really the case. It's just how the market moves. The big boys know, and there are certain prices that they're looking out for. It's just that where you put your stop loss, you innocently put it there, but you didn't know that the big boys actually needed that price. So, and I know that sometimes people feel like, maybe where I'm putting my stop losses is where I should be looking for entries. Sometimes it ends up feeling that, and I'm sure that most of you have been trading for some time. You can definitely relate with that. It's all a matter of how well can you read and interpret the story, and that's the reason why it happens. So I hope that you also heed to that advice. And of course, we try and give you guys as much value as possible, when you come in for this session. So make sure that you really end up factoring that into your trading. It will definitely change a lot for you. So moving on into the next one. This is the New Zealand dollar against the US dollar. Also a new entrant on our watch list. So for this one, we're going to be watching out for sells. You can see that yesterday, the New Zealand dollar was really getting hammered. Also moving into the Asian session, the US dollar is really hammering, the New Zealand dollar. So let's see if we can get the market coming back in. At least if the New Zealand dollar can be able to get some strength and push back in within this region, then we could possibly look for some sells within that, calm down. Alternatively, don't really look for sells within this region. Reason being, we do have some sort of an SNR, some sort of an imaginary level, or you can call it a line in the sand. That's not very, very visible, but ideally you could easily find that you could hit the sells here and the market could easily end up reacting on you quite aggressively. The buyers have pushed off here before, they can't end up doing that again. So you're better off looking for the sells high up within here, so that when the market comes down and let's say you get issues within here, you could definitely manage your trade, within this area, even if you can't get all the way down to within here. Alternatively, what you could do is wait for the price to actually break free of this region to the downside. If it pulls back in and attempts and actually holds beneath this region to the downside, you could actually end up looking for your sells and you could actually resume. You could look for sells here, but I think those ones, unless you're really experienced and really advanced on the charts, in terms of how to manage the situation within here and think in case things start to go wrong, if you're an amateur, you could easily end up mismanaging things. So basically end up advising either look for the sells higher up, or in case the market actually breaks that region to the downside. I think there it's a much safer bet. So moving on into the next one. This is the Great British Pound against the US dollar. So this is also a new entrant on our watch list. So for this one, we'll be watching out to see whether we can get selling opportunities as well. So watch out for those three areas. Once again, for guys who are new to trading, remember, we're buying the US dollar. So for this one, it's to the right. So it's the counter currency pair. So by selling the Great British Pound simultaneously and automatically, we're definitely buying the US dollar. So for this one, watch out for those three areas right there. Consider the buyers are coming in nice and slow, which is good. This is what we want to see. So if you can get the price coming back in as close as possible within here, you could look for sells within this region right here. You could have your stops. Maybe you could use this as some sort of reference point. Alternatively, what you could wait for is if the market comes in within this region, if it does actually attempt to break to the upside and the sellers really do end up retaliating, these sellers who push the market down and they push the market to the downside and the buyers attempt to come back up. If it comes back in within there, now at that point in time, you could definitely use this area as some sort of a reference point in terms of where to put your stop loss. So watch out for that. But also remember the region at the top, in case the market comes in all the way to within that area, that's going to be the last area where we'll be trying to see whether we can get our last selling opportunities. So last but not least, we do have the US dollar against the Japanese yen. So this is a currency pair that we had yesterday, and we're trying to see whether we could have gotten sells on this one yesterday, and I think I'll switch up the level. So yesterday, this is what it was looking like, and you can see that in the morning, when we're looking at the charts, the market was somewhere within this region, went to the upside, really struggled to hold to the upside, but the sellers did come down. Could have been a bit tricky in terms of grabbing the sells, unless maybe you are looking at a smaller time frame, to really end up grabbing that sell to come down. But you can see that the market came off there, came to the downside. Seems like the market is in some sort of a range within here, or maybe even a bigger range to the upside, if you're also taking this region into consideration as well. But you can see that generally after that, the market did actually end up fooling around within this region. So for this one, we're going to be looking for buys. So let me just switch up these levels like this. So ideally, the conservative region will be at the top there. The aggressive will be down within this region. We're in some sort of a range, then that means that the best buying opportunities are definitely down within this region right here. So watch out for that. Watch out for this region right here. The only way we'll be looking for the buys here is you can see that the sellers have come down, which is good. There are these buyers who are sitting within this region. If they can actually push the market to the upside once again, and we get the market actually holding, above this region, then ideally at that point in time, we could look for the buying opportunities. And that buy will definitely be much safer as opposed to looking for the buys now, because we are more or less back within the range. You're not too sure whether the market could actually break this region to the upside. You could hit the buy there. Next thing, price is back down within this region right here. So just to avoid that, it's possibly better to end up looking for the buy either at this point in time, or if the market comes back in at the bottom of the range, then you could look for the buying opportunities much, much lower. But remembering that the red SNR, in case the market breaks that region to the downside, then unfortunately, at that point in time, there will be no trade for us. So I guess that's pretty much it for the currency pairs. For the guys who came in late, feel free to take note of that. So we're going to move on to the commodities and the indices. So we're going to start off with the NAS 100. So for this one yesterday, we were trying to see whether we could have gotten some buying opportunities. You can clearly see the three regions right there that I had pointed out. And in the morning, price was somewhere within this region. So you can see at around 9:10, price was just coming back in within this area. It wasn't really the best of areas to look for the buy. Couldn't have known what the sellers would have done, but you can see that the market broke to the upside and technically held above this region. Ideally, at that point in time, if you did attempt buys and have your stops here, you can generally see that the market did continue to push to the upside, although a lot of patience was needed. You can see that the market really fooled around here, all through the US session yesterday. It was only later on, as the day was coming to an end, that's when the market really started to make a move for it, all the way moving into the Asian session. So for this one for today, watch out for these three regions right here. So we do have the conservative at the top, we have the aggressive all the way down here. For as long as we're holding above this region to the upside, then ideally we should be looking for those buying opportunities. Right now, don't look for those buying opportunities. That's a horrible idea. You can generally see that there's some sort of a resistance area within here. Unless the market breaks to the upside, something similar to this, maybe we could end up having a repeat of this. If that happens within here, market breaks to the upside, holds, just like it did within this region, and does that over here, then ideally at that point in time, you could actually go for the buying opportunities. But right now, don't look for the buys. Give these sellers the benefit of doubt. Could find the market coming back in, back in within this region right here, considering the fact that you can see how aggressively the market pushed to the upside. This move right here is also something that's visible, especially on the bigger time frame. And I think the NASDAQ has actually never been here before. This is the highest it has ever been, like ever. So you could find that the market, considering the fact that this is also something that's visible on the bigger time frame, you could find that the pullback could come in for some sort of a retest within this region right here. And of course, definitely, very many people are looking for buying opportunities right now. Doesn't mean that we're not going to be looking for the buys. We just need to be smart about how we're going to be looking for the buying opportunities. So we do need those pullbacks to come in. If that happens, then generally looking for the buys, within this region, or maybe even somewhere within here, could actually not be such a bad idea. Similar situation, of course, if it breaks to the upside of that region at the top, then of course on the pullback, you could actually end up getting a really good buy. So moving on into the next one, this is the US 30 for the Dow Jones. So for this one yesterday, we were watching out for buys. And you can clearly see the three regions right there that I had pointed out. In the morning when we're looking at the charts, price was somewhere within here. But I also had pointed out that there was this minor SNR within this area right here. And you could find that the market could technically end up attempting to push itself off this region to the upside. And you can see that it did do that, although we were really keeping our fingers crossed that price would have come back in within this area right here. But unfortunately, that didn't quite happen. And you can see that during the Frankfurt London Open, price pushed itself to the upside. And you can see that the market went up so aggressively. But like we always talk about, chasing the buys is never really a good idea. It was better off. I mean, if you missed out on the buys as the market was moving up, you can imagine the guys who hit the buys, especially when the market was all the way high up right here at the tip. There's definitely some cowboys and some ninjas, somewhere in the world, hopefully not in this session, but there are definitely some guys who hit buys when the market was high up here and they were convinced, that trade was going to buy them a house or a car. But you can see exactly what happened to those guys. The market pulled back in quite aggressively. Of course, the best thing was to wait, for the market to come back in within here, give some sort of a retest and see if the market was actually going to hold above there to attempt the buy. But you can see that the market pulled back in quite deep. So maybe some of you may be looking at this situation right here. And let me even take out this level right here, and you're wondering why is it that the levels haven't moved. It's because this is a massive probe. If you end up looking at it on the bigger time frame, you'll literally see that the market has actually not broken this level or this region to the upside. The sellers are still here. This massive probe just shows that there are a bunch of sellers who are sitting within there, but the story still maintains. Had the level actually broken and the market held above here, then would have adjusted levels a bit higher. But considering the fact that it didn't actually end up breaking, and it came back in and it's actually holding to the downside, then it means that this level is definitely still a level area to reckon with. So for this one, the levels are the same. So same story. Let's see if we can get the market breaking above here to the upside. It broke aggressively yesterday, but unfortunately couldn't sustain above that region to the upside. So let's see what happens within those three areas right there. If the sellers do end up attempting to push the market down again, like they did aggressively, maybe they are not yet done, in terms of the push that they started yesterday, then you could find that they could attempt to break this record. And if that happens, then that will put the market squarely back within this region. And you could find that the proper buys or the buying area that askers were watching out for yesterday will possibly end up coming into play today. So watch out also for the region at the bottom. Remember, in case the market breaks beneath the red SNR, then at that point in time, then we'll possibly start to look for selling opportunities, but only if we do get the confirmation that the market has actually broken to the downside of that region and is actually holding to the downside of that region. It's very important to always wait for that, because even just going back to that situation yesterday, when the market broke to the upside, there are definitely so many breakout traders who thought that the market was now going to continue moving to the upside, for the Dow Jones. But unfortunately, the market came back in. So you can actually end up saving a lot of money, just by making sure that you're always waiting for the pullbacks. It's something that we've also learned over the years. When we teach these things, we teach them out of experience. And, the advice that we give, it's not something that we went to class and we studied. It's the areas that we've lost tons of money, millions of money, doing is what we actually end up coming here. We advise guys not to end up doing. So moving on into silver, which is the second last thing that we do look at each and every morning. So for silver, the bias yesterday was to look for buying opportunities. You can see the three areas right there that I have pointed out. In the morning, price was somewhere within here. Remember, I pointed out that we didn't need to see the aggression of the buyers coming in before we could look for the buys. You can see that the market really struggled to pick up off this region right here to the upside. Like the buyers were really nowhere to be seen yesterday. You can see that off this area, the sellers did come in quite aggressively. This was some USD news events that came out at around 5 or thereabout. And you can see that the market came down quite aggressively, tapped back within this region right here. And you can see that off this area, the buyers were able to actually sustain the price to the upside and push it to the upside and, counter the sellers who had really come down quite aggressively. Although you can see that the buyers did push to the upside, but although it doesn't really seem like, they're really quite there, because if you look at how the sellers came down and how the buyers came up, caution is advised. But ideally, considering the fact that we're still holding above this region, we still ideally should be looking for those buying opportunities. So right now, the market has come to the upside, just above this region. Let's wait and see if we can get some sort of a retaliation of the sellers. Let's see what they can end up doing. If they push the market to the downside, just wait, because you never know if the market could come back in all the way till within this region. If it doesn't, and let's say the buyers are able to counter the sellers once again and the market holds to the upside, then I think that buying opportunity will definitely end up working. Maybe even taking out this region to the upside, because a lot of guys did definitely jump in on sales, especially when the market was breaking to the downside. And of course, once again, definitely some ninjas somewhere on the charts did end up hitting sales when the market was down there. Right now, I don't think they're really having a very good time, especially if they've moved to their stop losses and, that whole mentality of, this thing can't go up forever. It has to come down. So I'm going to take out my stop loss. My friend, you're really going to have the worst time of your life if you end up doing that. So do watch out for that. But remember, for silver, for as long as we're holding above here, the bias ideally should be to look for buying opportunities. In case the market breaks to the downside of that region and, you can visually see that the market is actually holding to the downside, then ideally at that point in time, you could look for your selling opportunities confidently. Right now, you can still look for sales, but don't be overconfident about them. The buyers are still more or less in control. So last but not least, we do have gold. Now for gold, I know that gold and silver normally tend to move together most of the time. Unfortunately, this time around, they're on opposite ends, but also based on the individual stories that they do have. So you can see that for silver, it actually moved to the downside, but the buyers were still able to maintain and were still holding in buyers. For silver, for gold, on the other hand, the sellers did actually end up coming down quite aggressively. And you can see that to some extent they did take out this level, which was a key area that us guys were watching out for in terms of the buys. And you can see that the buyers are coming up in a very, very choppy manner. So for this one and silver, the stories almost look similar, but the levels are slightly different. So make sure that you take note of that. So for this one, we're going to be watching out for sells for as long as we're holding below this region to the downside. Right now, the market has come back in within this area right here. So we're going to be waiting to see what happens. Hopefully, if the sellers do end up showing up, within this region right here, and let's say the buyers really slow down within this area and the sellers really do end up showing up, there's a possibility these sellers who pushed the market down aggressively might actually end up having another attempt, to the downside. But if that doesn't end up happening and you find that the market holds above here to the upside, I could say at that point in time, either you could wait for the market to come back in within this region, or alternatively, what you could end up doing, of course, depending on how good you are in terms of trading, you could look for some counters in terms of the buys, because you could find that maybe gold could potentially be following what silver is doing. Sometimes silver ends up leading what gold is doing. So you could find that maybe if you see that gold is actually moving and the buyers are starting to come in and it does this, you could find that maybe on this one, you could find that the buying opportunities could take place. You just need to be fully well aware that there's this region right here that you need to watch out for. And also don't be over ambitious, in terms of the buys. It's one thing to take the buy here and target all the way high up here, which is well and good. Yes, it's possible the market could potentially end up getting there, but you also need to be realistic in terms of what you can visually see on the charts. And you can generally see that the sellers did push aggressively off this region to the downside. So just make sure that you mark that area. But ideally, if you can end up clearing that region to the upside, I think if you look for your buying opportunities at that point in time, then you can definitely jump in on them, much more confidently. So don't be overconfident on the buys for as long as we're holding beneath this region to the downside. So make sure that you watch out for that, but ideally also keep an eye out, especially for the sells. If you end up tuning your mind and your eyes to really see the buy, especially when we're still in the sellers, you might actually not see the sell happening. You might easily end up missing out on it. So just make sure that you do watch out for that. So I guess that's pretty much it in terms of the currency pairs and everything that we're watching out for. So I think we can end up looking at the Q&A section to see what wanasema aje. So I see Esther Kabiro there saying, good morning, team. Good morning back to you, Esther. Always happy to see you here. I see Claire, you're asking, you're saying should be Euro Yen. I don't know what exactly you're talking about. Are you talking about maybe not having Euro Yen here? All right, I guess you're right. So I think the one that we had as GBP was actually supposed to be Euro Yen. So let's just add that. So thanks for that, Claire. So for this one, we'll be watching out to see whether we could get some buying opportunities. And it seems like the market is still respecting levels. So for this one, seems like the buyers are down here, sellers are up there. This one is clear cut. We're in a range, mid-range, somewhere within this region right here. So definitely the levels are somewhere within this region. So if the market breaks beneath that region to the downside, you can see that even that's the low of yesterday. So if the market breaks beneath that, then just know that your buying opportunities are null and void. So let's see what happens. So thanks for that, Claire. Much appreciated. So guys, make sure that you do take note of that. And I see Alan Rono there saying, hi John, thanks a lot. We appreciate it. Karibu sana, Alan. Always also happy to see you here every morning. So I guess that's pretty much it from us for today. Also remember, if you need further education, we're definitely offering that. And that's why we are here over and above the mentorship. There's still one slot that's still left for the July class for the Amplified. We are going to be starting off next Monday on the 15th. So there's one slot left. I know there are many guys who've applied for August, which is okay. I know, considering the fact that we had just come back to doing the sessions and we announced this, that's the reason why we actually ended up making a watch list, because we wanted to see how ready guys were. And we're actually quite surprised to see that guys were actually ready in July. We're actually expecting to possibly get a lot of guys, coming in from August, which is the case, but we got a couple of guys saying that they're ready for July. So if you're ready to come in for July, the slot is still open, but the main thing you need is the masterclass. The reason being, there are quite a number of things that are going to be, boosting, and that's the reason why actually this is called the amplified, because we're going to be amplifying a lot of things that we've discussed in the masterclass, and actually, needing that foundation is very important so that we can actually be able to build quite well over the 4 weeks, that we're going to be together. So we've also realized a lot of people who are applying have not done the masterclass. It's very important. I know many people want a shortcut to getting things, but there's a certain route that we have made for you to be successful. And the route that we're making is a route that we've also passed out, a lot of people in this route, especially the guys at the one-on-one and stuff. So this is more or less like a stepping stone that we're bringing in between, because we realized even just listening to very many people, it was a big jump, going from the masterclass all the way to the one-on-one. So we brought a step that was, a bit easier for guys to end up taking so that they can actually end up leaping to the one-on-one. So the masterclass is very important. So for the guys who are applying, make sure that at least you've done the masterclass. If you're going to be doing, let's say, for example, even if you want to do the AMP, let's say in August, or even if it's September, you have more than enough time to actually jump in on the masterclass, go through it. We're also planning to do an exclusive webinar for the masterclass, guys. So we've not forgotten about those guys. We're also going to be doing maybe on a regular basis, like maybe once a month or so, where we sit down with guys in the masterclass, address their issues and whatnot. We've also never done webinars for beginners, but of course, with time, you can definitely incorporate things. So we're also planning to do something also for the newbies. And I know that a lot of you guys know a lot of newbies out there, guys who are just fresh into trading and they're coming into it. We've never really dealt with people at that level, but we're willing to actually do a webinar where we sit down with all the guys who are new and actually walk them through, what to expect and teach them the fundamentals and basics of how to end up trading. And of course, push them into the UBC, then from the guys in the UBC, pushing them to the masterclass, the guys in the masterclass into the amplified program. And of course, now the guys in the amplified, of course, if they want to jump into the one-on-one, it's going to be at a discounted rate, because it won't be at the same price. Because also guys who are saying that, the prices are high and whatnot. And like I always say, CCC kama zakayo, we listen to people. If that's what the people have said, fine. Let's try and see what we can end up doing. So that we're trying to push as many people as possible, especially to the top tier, the one-on-one, because at that level now, we're also in works to start to do some sort of a prop firm. I would comfortably give $2,000, $3,000, $5,000 to someone at that level, because we understand what they're doing on the charts, so we're also gonna be looking at guys at that level. So we're really gonna be pushing guys at all levels. So when we come up with these programs, there's a means to an end. We're not just telling guys, come and learn, we're also giving you a means to an end. There's something at the very end that if you end up working, you can definitely end up getting all the way till there. So like I mentioned, one more slot left. If guys are ready, if not, it's still fine. I know a lot of guys are ready for August. If you've not done the masterclass, make sure that you do jump into it. We standardize the price on that. It's right now just going for around 9,000. And the links and all the information to that is definitely in the chat box. Of course, for guys who are watching us here on Zoom, for the guys who are watching on the social media platforms, then just look out for our social medias and the posters. Look at our website. You'll definitely end up finding that information. So I guess that's pretty much it from me. I guess we'll see you guys tomorrow morning, 9 a.m. in the morning. If you do get any trades, whether good or bad, feel free to send them in to us. We'll be more than happy to see them. So with that, happy trading, guys. And bye for now. With the pips with you. God bless.